Silicon Valley Bank. You probably never even heard of it, but it just crashed, and it's going to affect you more than you realize. And pretty soon, you're going to wish you had never heard of it. Now, stories about banks and financial stuff is boring most of the time. I'm going to summarize the major points and give you the overview so you can be informed about what happened and what's going to happen next. Silicon Valley Bank was the 16th largest bank in the country. Now, as I understand it, it specialized in two things. One, fundraising for capital ventures, startup tech projects, unicorns of the future. And two, woke ideology. We'll be getting into their DIE policy page in just a moment. SVB, Silicon Valley Bank. SVB was a very large bank in California. They had billions in assets under deposit. Now, because we have a fractional banking system, it basically means that any bank with $1 billion can loan out $9 billion. It's basically free, unlimited money, and banks can borrow from other banks and then take that money and loan it out again at a 9-to-1, and the problem gets infinitely worse, and all the banks become borrowers and creditors to each other over and over again. Well, they just defaulted. Now, some people heard they were in trouble, so they rushed to take their money out first. Like, say, for example, Jamie Dimon, the CEO of JP Morgan. He got his money out first. He withdrew $42 billion. And that kinda caused the panic. But don't worry, he got his money, so he's fine. He's not going to lose any sleep. Silicon Valley Bank had $152 billion in assets on the books. Could be more, could be less. But that's the number most people are going with, so let's just use that amount. Actually, hold on, that's not accurate. They had $173 billion in deposits. That 152 billion is the number that is uninsured. That means all that money just basically disappeared. If you have an account, had an account at that bank, it's probably gone.
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
Sorry. Okay, now you might be saying, well, I didn't have an account there, so who cares? Yeah, under normal circumstances, I would agree with you. But as I stated earlier, all the banks are intertwined. They're interconnected. All the banks borrow and loan to each other. There really isn't any money sitting in a vault. It's loaned out and then reloaned and then reloaned. Rinse and repeat until you never know who owes what and to whom. But when one bank defaults and can't make payments, it affects every other bank in the chain. So basically, every bank? So why did they fail in the first place? That's a great question. It would be easy to say they made bad financial decisions, or someone stole the money, or just blame it on the pandemic. But a serious contributing factor was wokeness. Now, they're a California bank, and they are fully invested into ESG. ESG stands for Environmental, Social, and Governance. It's basically a metric to establish how woke a company is. They put profit on the back burner. Now, this company was way more concerned with having the right kind of policies. Now, I'm not saying they didn't care about profit. Oh, wait, no, yes, I am. I'm saying they don't care about profit. According to their ESG page, they were more concerned with equity, inclusion, and diversity. Oh, hell, let's just throw in some carbon neutral policies just to seal the deal. They never had a chance of being successful. The woke just caught up with them first. Now, Let's go way back. Remember back in 2008 when Bear Stearns defaulted? That one bank set off a chain reaction that cost most people about 50% of their 401k retirement accounts. Stock prices tanked. It kind of started the housing crash. It really kind of sucked for a few years. Now that was one bank, but it was also connected and intertwined with hundreds of other banks. Bear Stearns at the time of the crash had $18 billion in assets. The U.S. government had to bail out over $800 billion to try to save the country. Did it work? That's debatable. But the point is, when an $18 billion bank failed, it cost us $800 billion. How much are we going to bail out this time? Now, the number that I'm hearing around is over $20 trillion. Congress has to pass a bill like that. Will they do it? Yeah. My guess is that a few sensible people will throw a fuss, but in the end, Congress will cut that check, and they're going to bail out the banks again. $20 trillion? Can we ever pay that back? No, of course not. But pay it back to whom? Everyone must realize that our money isn't real. And by that I mean it's not based on a real thing. If they can print $20 trillion out of thin air, why is anyone paying taxes? That question is going to come back later. You're going to hear people start questioning this, and the conversations are going to get louder. Do you know what $1 trillion is? All right, let me put it this way. If you could earn $1 million per day, every day, it would take you 2,740 years to earn $1 trillion. Okay, here's another way. If Jesus Christ was immortal and earned $1 million every day of his life, he still would not have $1 trillion. And neither would Cleopatra, Genghis Khan, Julius Caesar, Confucius, or Socrates. None. That's just $1 trillion. The scale of the money printing that will happen will be devastating. So how will this affect you? Well, first, the stocks, the 401k accounts, housing, all of these are going to crash. Retirement accounts are going to be destroyed. If you're a boomer and you're depending on the fixed income of your retirement account, ouch, things are going to get rough. Housing prices are also going to drop. People are going to be downsizing, try to save money. But when every McMansion is for sale at the same time and the demand is low or non-existent, prices are going to crash. We've already seen housing prices drop, and it's going to get much, much worse. But there is good news. There will be buying opportunities. If you're able to hold some cash or perhaps precious metals, there's going to be some deals of a lifetime. Imagine buying 20 acres of farmland for 50 grand. Deals like that will be around. But unfortunately, they'll be reserved for people who can still borrow good credit, or they have the ability to purchase with cash. This is going to be the greatest wealth transfer that the world has ever seen. People that are smart with money and people that have money are going to control damn near everything. And everyone else, you're going to live in micro apartments, eat bugs, own nothing, and be happy. So here's a bullet point summary. Banks have already started crashing. More banks will be caught up in the contagion, and they will also crash. Retired boomers will be hit the hardest. Congress will print trillions to try and save the country. It won't work. They'll need to print even more, just like last time. This will be the worst depression in global history. Buckle up. Things are going to be tough for a long time.